Hello everyone, and welcome to the Quantpedia Explains Trading Strategies video series. Today, we will discuss how to select the best country and sector ETFs.
Hello everyone, my name is Radovan Vojtko, I'm CEO of Quantpedia. Today we will discuss how to select the best sector ETFs and best country ETFs. We will discuss what are the advantages, what are the disadvantages, and which models you can use for this purpose. Firstly, let's discuss what are the sectors ETFs. So we can divide the equity market into all of the sectors. If we take the companies that are pursuing the same line of the business and we put them together into one fund, we have a sector ETF. So we have, for example, companies that are industrial companies, we have companies that have a business in healthcare, in financial, in real estate, in utilities, technology, etc., etc. These are the sector ETFs. We can ask ourselves the question, which ETFs are the best, or which sectors can we select for the next period. The same idea can work for the countries. So we have a lot of the countries around the world, and we can try to select the best countries. We have also the ETFs, the funds that are traded on the stock exchange that invest into individual countries, and we can use them and select the countries that we think are the best. So the question is how to do it. Firstly, we need to discuss that it is not easy. There is an interesting paper. It's a recent paper from May 2023. And this paper discusses that it can be profitable trading style when we pursue the sector picking or industry picking or country picking. So when we try to pick the best countries or best sectors, but it is usually really challenging and more so challenging than it seems at the first sight, because building Google trading model requires a lot of research. And the problem is that there is limited number of industries and limited number of countries and also limited number of sectors. So if we sort them based on the aggregate characteristics, we can wash out some important cross-sectional variation, or we can lose some information. So sometimes it's easier just to take all of the stocks. We have like, I don't know, tens of thousands of stocks all around the world, and it's of course easier to do the stock selection. So select which are the best stocks from each country or from all of the countries when we put them together, then just to simplify our trading and just to use the very narrow universe of sectors or country ETFs. So it's not very easy, but there are some ideas how we can do it. What is the paper showing us? That really reliably positive idea for selecting countries is a short-term momentum, and reliably strong predictor for country strategies is a long-term momentum, but it has a negative reliability, so it means it's a reversal strategy. We can show some of the variation of those strategies. We have some of those variation in our screener, and I will show it to you in a few seconds. Firstly, there are a lot of sector picking strategies. We have like 20 of them in our database. It is possible to build a sophisticated model. It also works for country picking, so we have over 20 country picking strategies in our database. And once again, it is possible to build quite sophisticated trading strategy for country picking. What are the simple that are working? So the simplest one is the sector momentum, so the rotational system. What does it mean? So we take all of our sectors, we use 10 sectors ETFs, and we pick those that are performing the best, and we rebalance that on a monthly basis. It has relatively fine performance. So this is the idea for sector picking. And what about the countries? So how to build a model that will choose which countries are the best? The best idea is to use the value, not the momentum, but value seems to work better among the countries. So we can define the value just using the price signal alone, but it's better to build the value using also the earnings signal. So we can use the KP ratio. KP ratio is a ratio that builds the average cyclically adjusted price ratio over 5 or 10 years, so for a longer period. And it helps us to select which countries are the cheap and which markets are really expensive. Then we can build a rotational trading strategy that periodically rotates to countries with the most undervalued equity market, and if we want, we can also the short countries with the highest or that are expensive. How does the strategy look like? So we have an investment universe that consists of 42 countries that are easily accessible via the equity market, so via ETFs. At the end of every year, we calculate the Shiller's KP ratio, so it's cyclically adjusted P ratio for each country, the investment universe. The KP ratio is the ratio of the real price of the equity market, so adjusted by the inflation, to the 10-year average of the country's equity index, so again adjusted for inflation. So the whole methodology is very well explained on Shiller's homepage. So here is the homepage. There are a lot of the places on the internet where there is explanation. And the investor then invests into the cheapest 1/3 of the countries from the sample in those countries that have a KP ratio below 15. And the portfolio is equally weighted. Investor holds 0 cash instead of countries with a KP higher than 15 and is rebalanced yearly. So the question is how the performance look like. So as we can see, it can profitably select the countries that are outperforming. Here we have a charts from the paper, so we can see that the most expensive countries are the red ones, so the performance is really not something special compared to the cheapest third of the countries, so the blue or the green line. So we can use the KP ratio very well to sort the countries and select those that are the best. So those are two ideas, the sector momentum and the value factor, how we can pick sectors or countries using the ETFs. Those are not the only ideas. There are a lot of the other models. So yeah, it is possible to build a model for sector picking and country picking, but it's not an easy. But once we do it, you can have very nice model to your whole portfolio. So thank you very much. I hope that you like this video, and I hope that you join me in the next one. Bye.
Interested? Then pick another video to learn more, or subscribe to Quantpedia Pro and try how our analytics and reporting significantly save time spent on quantitative research.